Ajay, hi, good morning. Good to have you on the show. Ajay, RBI, in the address yesterday has stated that small business units, small borrowers, MSMEs, MFIs are indeed the most vulnerable in the COVID second wave. Considering you serve the bottom of the pyramid, Ajay, what is the kind of impact that you've seen on the cash flows of your customers, given that once again we are seeing COVID strike the country?
Good morning, and thanks for inviting me from Jana Bank. I think if you look at April, the collections have dipped, and it depends on geography and depends on the product segment. So let me give you a sample of affordable housing. I think it's dropped roughly between 2 to 3%. So 99% collections have dropped to a 98, 97. The small businesses, MSMEs, they have done a 3 to 4% drop. And the microfinance segment has seen a 5 to 6% drop. So different segments are responding differently. The one thing I must add is it's too early for a cash flow impact. I think what typically happens when you announce lockdowns, people tend to start saving because they're not sure how long the lockdown will persist. And there is a tendency to hoard. So it's not necessarily a cash flow issue right now. It will get to become a cash flow issue if the lockdown persists beyond 2 months, in my estimation. I think that will be number one. And I think then we'll be able to do a fair estimation of what the second COVID phase 2 challenge is. The one trend we have seen change between phase 1 and phase 2 is we've seen people really getting very nervous about what would be a hospitalization cost. So, what will an oxygen cost? What will a hospital bed cost? What will the medicines cost? People are more anxious now. So obviously the amount to save and to hoard for anything that may be an emergency for self, family or friends, I think that has gone up quite a lot.
Sure. Ajay, given that, RBI yesterday announced that SLTRO for small finance banks worth about 10,000 crore rupees at the repo rate, under which fresh lending of about 10 lakh per borrower is now allowed. Also, that lending of SFBs to MFIs, the asset size being 500 crore rupees to individual borrowers, classified as priority sector. How positive do you think these measures would be, and what is the kind of impact they could have on small business units, on MSMEs, and can that really help resurrect the situation that they're marred with right now?
So I think the first thing is, like the governor mentioned, the brunt of the challenge will be at the bottom end of the pyramid, small businesses. And that's very natural because they're at the last in the food chain. So obviously they'll get hit the most. I think the second biggest issue really is availability of credit. So, you lose cash flows. You really want to buy fresh goods. You have debt, bills outstanding, people aren't paying you. You're really going to be tight on cash. So really getting credit for the last mile, I think is really crucial. So what has been announced by the Reserve Bank, I think is, in a timing-wise, essential and very, very helpful. So there are two parts which the governor announced yesterday. One was SLTR, which allows us to up to 10 lakh rupees, avail the 3-year money at 4%. So that really helps the banks in a way that we have a lot of liquidity. So liquidity has not been the issue. And that's largely due to the efforts that banks have taken and what the RBI has done in the last year. I think what this SLTRO does, it allows us a small reduction in cost of funds, which is important because we are obviously in an elevated risk environment. On the MFI side, that's a separate issue, which is small MFIs obviously find it difficult to access bank credit. In a COVID moment where people do know there is stress at the bottom end of the pyramid, they will find it even more difficult to access credit. Given that small finance banks were all at some point of time small MFIs themselves, and I have a lot of background in the MFI industry, obviously we will understand their issues, be able to relate to them. And when it comes to credit, we'll be the first to probably get there with these smaller MFIs. So two parts to it. SLTRO really helping small finance banks extend credit, which is crucial at this point of time. And second is helping small MFIs, because small MFIs are very, very important because there are geographical places where not all SFBs are present. Their community connection is very high. They understand geographies well. So getting them going and making sure they're also serving customers in these difficult times, I think is also very crucial.
Sure. Now, given the extent of the severity, do you think the amount, the SLTRO amount, is actually going to be enough? What more do you think really needs to be done in order to help this segment?
So the way I understand it is, it's enough for the next couple of months. If the situation does persist, I'm sure we can request for more. Like I said, cash flow is not the challenge, and I think this amount can certainly be, we can go back with a second request if required, if the situation does persist. So I think for a first slug, it's a very good amount, and it will help all the 10 of us get into the act and, takes some credit on. I think the bigger question really here is, does it address the risk? So I'll give you the numbers, which is MFIN numbers. The microfinance industry, if you see, has roughly about 6 crore customers with a 2.2 lakh outstandings spread across all NBFCs and small finance banks and big banks, etc. This is the total size. So 6 crore base of 2.2 lakh. The published NPA number of 31st December 2020 is 4.9%. The same like-for-like number a year before was about 0.5. So let's say an elevated NPA of about 4.5% year on year is what we see in the industry. Say COVID-2 would take a 4.9 to, let's say, a 7% or a 6.5%. So you can argue where it will go. So we are really seeing a difference on industry of about, say, on a normal cycle, 1%, you're probably sitting as a 6.5%. So there's a 5% differential, which is an elevated risk for all of us, which we'll all have to sit the economic model and see how it fits. This TLTRO really covers about 1.5%. So let's say my GSEC 5-year was around 5.5%. I get at 4%. I really get to say 1.5%. And I can use that to offset some of the risk that I will take in this environment. So that's where the real reason and the positive of TLTRO is. It does take some pressure away from where the elevated NPAs would be. And one has to then figure out how do you work out the balance of the economics, which you see in the environment. Having said that, the real unknown, which none of us have good answers to, is when will the phase 2 start plateauing? When will it start, not spreading further? What will the pace of vaccination? So I think there are some unknowns which we don't know the answers to, and I think that will decide the pace of credit. But fair to say that what happened yesterday, really, if you ask me, it was a financial inclusion day in many ways.
Okay, great. What's the kind of impact on margins also you see with this window? Overall outlook that you could share with us on margins?
Yeah, like I mentioned, margins would be like the 1.5% extra that we would get will certainly go in helping cover the additional NPAs that we will see. I don't see a margin impact really from a cost of funds beyond this. The cost of funds have come down in the last year by another %. So let's say if you're running a small finance bank or a microfinance institution, you probably would have seen SLTRO plus cost of funds save you about 2.5% over the last 12 months. You really need to cover the rest. So margins are not going to be under pressure. I think the bigger challenge is how do you, make sure that it's the right time to go out and lend. You're not expecting a severe phase 3. You're probably seeing a plateauing of phase 2. We obviously have the machine, and I think we've got a lot of help from the Reserve Bank yesterday. It's just when we get out there. So I think margin is not a concern. It's just at what point do you think it is safe enough to go and start lending in a more serious way?
Right. Getting a move on then as well. Let's focus in on Right. Just gonna get a view as to, the RBI has announced that Resolution Framework 2.0 invoked up to 30th September for individuals, small businesses and MSMEs with a total exposure of about 25 crores. However, the accounts should be standard as of 31st March, and that has not been not availed as recast earlier. Do you think that there's going to be a considerable amount of borrowers who will benefit from this who did not avail of the recast earlier?
Yeah, I think it's a very useful one for borrowers, certainly people who were not anticipating such a big lockdown. I'll just give some sense from our numbers and what I hear around. If you take the last restructuring, because there was emergency loans available, which the government of India had offered, and most banks helped their customers with the emergency loans, I guess the amount of customers who came for restructuring were a lot less because people preferred to take on working capital help that the banks provided, use that to run their businesses. And I think that worked well for the last few months. And that really began late last year. We have seen roughly about 2% using restructuring. I would expect a similar number now. So I think it is very useful because businesses who are not prepared for such a huge impact in phase 2, they certainly will need a short-term help. And this will come beneficial. What we can see from the customer behavior in April, manufacturing and services largely unimpacted for April. It's the retail and the wholesale traders which have seen the brunt of the impact in April. We'll have to see as we go into May if this sustains, then other parts of industries will start seeping in. So overall, it is good to have the restructuring program because certainly customers may not be able to pay for 2 months, 3 months. Not that customers are bad in any context or their businesses have really lost economic models, but they will have a tighter cash flow. So very helpful to have the restructuring program again available. Not a lot of customers will benefit, but the needy ones will. And I think it's important for us to be ready for them.
Mr. Kanwal, let you go on that note. Thanks much for your time and giving us a view as to how you've read into all of the measures that have been provided and what this 10 lakh crore liquidity window means for SFBs.